What are the things to look out for in NIO right now, and how will the stock behave next week? Will NIO dip on Monday maybe? Today I have a bunch of exciting news to talk about that might affect how NIO share price will move next week, and especially on Monday at the open. We will first go through the biggest and scariest story that I have heard NIO bears talk about, and that's the fact that the House will be voting on a bill banning Chinese stocks that don't comply with the US audit regulations. I will make sure to explain to you how this bill might affect NIO stock and its owners. Spoiler alert, it's way overblown. I will also go through why another analyst, this time from China-based Northeast Securities, just decided to put an overweight rating on NIO, meaning why he thinks that it's a good buy right now. And lastly, I will talk about how I'm planning to play these news, as a NIO bull of course, and especially this possible bill that is coming out next week. So stay tuned. If you're new here, by the way, my name is Sam and welcome to the channel. If you find this video valuable, I would appreciate it so much if you press that like button. It helps the video reach out to more people and is the absolute best way you can support me. Also, if you want to be here for more updates, make sure to subscribe and join our growing community. Now back to NIO. So as always, let's first take a look at the stock chart and a closer look at the past month. We're closing up on December and I think we definitely can learn something from last month's movements. So obviously we have seen a very steady uptrend in November, going all the way from $30.58 to a whopping $55, an impressive gain of almost 80%. But what can we learn from the trends this month from a technical perspective? Well, to begin with, even though we're seeing these crazy rushes, there almost always seems to be just a slight pullback with people taking profits, before we again very quickly see people buying this dip and the uptrend continuing. I think this is a very good sign for NIO and just shows how dedicated NIO investors actually are, and that they don't let random noise throw them off from their investments and instead buy more stock as NIO goes down. From a more technical standpoint though, we have managed to break through the $50 a share barrier, test those levels again, only to bounce back up and just keep going up. So those levels can now be considered as support, absolutely unimaginable to me in the beginning of November. And who knows, if the November deliveries can at least match the expectations, we might be able to go into 2021 at a $60 a share price. Also, looking at the technical analysis, we are seeing a bull flag forming, which will likely be taking NIO to higher prices, at least in the shorter term. So yeah, I think things are really looking up for NIO, at least if you only look at the stock chart. Now obviously there are many things affecting the share price and not only the technical trend, but it can still be useful to look at it nonetheless. And now let's go into the more fundamental news and what is scaring NIO investors and making the bears happy right now. And that is the fact that the House is set to vote on bipartisan legislation that would impose restrictions on Chinese companies listed on the US exchanges, including require certification that they are not under control of any foreign government. The bill's sponsors say that the aim is to ensure that foreign companies traded in America are subject to the same independent audit requirements that apply to US firms. But guess what, guys? I think this is an awesome bill and that it is great that they are trying to protect investors from investing their life savings into companies that can possibly be fraudulent. But I think where people are going absolutely wrong is that they are not understanding that 1, this does not affect NIO whatsoever. And 2, even the Chinese companies who actually might get targeted and affected by this possible bill, such as Alibaba, still have large American pension funds invested in them. So first of all, as I said earlier, the bill only wants to impose restrictions on the companies that are not currently independently audited, the same way US firms are. But guess what, people? NIO actually is. In fact, NIO has the same independent auditor that Tesla has, which is definitely an American company, of course. When going to NIO's Investors FAQ, you quickly find out that the auditor is PricewaterhouseCoopers LLP, which is also Tesla's longtime auditor. So this bill really doesn't affect NIO at all, and I see no reason why people might be worried. And to add to this, even the stocks that might be affected by this bill, such as Alibaba, are still owned by American pension funds and other institutions. And if even the smart money isn't panicking about it, then I don't think we should either. So Before I go into my own plans and predictions for next week and December in general, let's first look at the arguments an analyst recently gave for why he just gave NIO an overweight rating or a bullish rating. It is always nice to hear from other people and just try to gain a broader perspective when it comes to these things. So according to the report released yesterday from Northeast Securities analyst Li-Heng Wang, the Smart Features and Battery Rental Service, BAS, provides certainty that NIO sales will continue to improve. NIO recently announced its third quarter results, and during this earnings call, the company said that orders using BAS solutions have reached 35%. Leo argues in his initial coverage of NIO that BAS business models caters to consumer demand by lowering the barrier for first-time vehicle purchasers, while also eliminating concerns about battery durability and retention. The report also mentions that NIO's Autopilot, NIO's automated driving assistance system, has been continuously improved and upgraded, and now includes a $6,000 option and a $2,280 option. It is expected that customers that have purchased both options have accounted for more than 50% of these orders, the report said. And also, according to Northeast Securities, the Smart label continues to enhance NIO's products and brand power. In August of 2020, NIO will launch its BAS program, or NIO have already launched their BAS program, which allows customers to buy cars without actually buying battery packs and to rent these battery packs of different capacities according to their needs. NIO also launched a 100 kWh battery pack in November, so this month, giving its models a range of up to 615 kilometers. NIO's gross margins are also improving over the past 3 quarters, with a positive growth margin in the second quarter and a gross margin of 12.94% in the third quarter, up 25 percentage points from the same period last year. Northeast Securities believes that this is due to the economies of scale brought about by the growth in vehicle sales volume on the one hand and the improvement in purchasing and manufacturing costs on the other, as well as the launch of the new ES8, which has improved the average price level. They also believe that with the overall scale of sales growth and subsequent new car launches, NIO still has a lot of room for improvement in gross margin, and its operation focus from high-cost NIO House to lower-cost NIO Space expense ratio will continue to improve. So finally, how am I planning to play this upcoming week? I'm not holding too much cash right now, but if NIO does drop down due to people being scared of this new voting bill, I will happily be buying more shares since I think there is no way this bill can hurt NIO. Other than that, my position is already large enough at this point, and I want to keep my portfolio diversified, at least to some extent. And if you decide to go into NIO after doing your own research, I also urge you to make sure that you own a bunch of other stock and to stay diversified. And as for a price target for the coming weeks, I am really hoping for a $60 share price, and I think there is a big chance that we can manage to get there. It is a common human behavior to think that a stock that is going up a lot is bound to crash, and that a stock that is always going down is bound to go up again. But usually, it is a total opposite that happens. Usually stocks that go up a lot tend to continue going up, and vice versa. This is known as momentum, a very interesting topic that I might talk about more some other time. And with that, I want to conclude today's video. If you enjoyed this one, please make sure to give it a like. As I said earlier, it really helps the video reach out to more people, and it's just the absolute best way you can support me if you would want to. Also, if you have watched all the way to this point and you actually enjoyed the content, very important of course, why not subscribe and join us in the journey to hit 10,000 investors by the end of this year hopefully. Thank you for watching and enjoy the rest of your day.